What's going on, traders? Welcome back to the live room, the New York session. How's everyone doing today? Happy Thursday to you. You're going to hear the birds chirping in the background as it's a nice day right now before it gets too insanely hot. So getting some fresh air. I've been in the middle of a heat wave. Evan says, so. Hope nothing's too bad, Evans. Hopefully it's just one of those days and nothing's going wrong. But hopefully today's session will cheer you up a little bit. Welcome for you guys watching on YouTube and TradingView as well. What you're witnessing is a look inside the New York live trade room where we live stream the first trade kind of walkthrough of the day, called the trade of the day. It's not always my actual trade of the day, but it's an opportunity I think will be educational and informative and spark conversation. Evan says trading speaking. All right, let's talk more about this, Evan. What's going on? What is making the trading so-so? Is there an obstacle in your way? You are trading live, if I'm not mistaken, right? If I remember correctly, you are trading live. Yeah, not so many opportunities. Well, that's not so-so. That's just life in the markets, right? Here's a question for you. Are you forcing opportunities or are you sitting patiently and waiting? Doesn't mean you have to like it, but are you doing anything that you're not supposed to be doing? Not forcing anymore. Then there you go. Good. That is a win. That is a win, right? Keeping money in your pocket is always good, right? That is basically a win, right? If you're not losing money, you're winning essentially in trading. That's how really this game works. It honestly is a risk management game. The idea out there about what trading is, we spoke a little bit about this yesterday. We did a trader coffee break, really good one on success, motivation, how to stay motivated, talking inside and outside of trading, which is pretty cool. But it really is just a game of survival. And that's the one thing I've learned over, not the one thing, but one of the things I've learned over my trading career is it's not just every day come in and try to win as much as I can. It really is just like, how can I keep my head afloat for most of the time? And then when I get that opportunity, how can I pounce on that opportunity and then go right back to keeping my head afloat? And if that's new to you guys, this may put things in perspective. The vast majority of the time that you're trading, you will be in a drawdown. Think about it, right? It's going to be a little depressing, but think about it. It's 100% true, right? The vast majority of the time that you are trading, you are going to be in a drawdown, right? Because essentially, you're not in a drawdown every time. You are in a drawdown every time you're not making new equity highs. And aside from the streaks of trades that you get, you're usually not making equity highs. You're usually giving something a little bit back. You're usually kind of working towards new equity highs, but most of the time, you are not making new equity highs. So the game is all about, how can I not make my situation worse? How can I not get sucked into what we spoke about this weekend on the Trading Edge video, over trading, under trading, the cycle of sadness? How can I just maintain, not do anything dumb, and then keep that hard-earned money safe until the good opportunities come? That is what trading is. So I feel you. It's actually been a busier week for me. I've had 2 trades this week. I got filled Aussie dollar yesterday. If you guys remember, I don't think we spoke about that for the trade of the day, but we did speak about it in the live room, the pullback trade on Aussie dollar. I did get involved in that. I almost got stopped out. Almost by about 5 pips, would I say almost. And then we got some other trades setting up. Pound yen has a pattern setting up. I did get skunked out of euro yen earlier in the week, so it has been a negative week so far. But we got plenty of time left. So let's hop into things today. Or she said the FTB on pound dollar played out nicely. Well done. Let's take a look at the economic calendar today. Again, the next 2 days are going to be a little bit interesting. We got European holidays Thursday and Friday. We also have important American news coming out on Thursday and Friday as well. Today being your ADP non-farm, which is essentially the precursor to tomorrow's job number. Now, again, these things don't mean as much as they used to. I should probably mute my phone. Get this out of here. These things don't mean as much as they used to, but there's still a likelihood that you can see movement in the market, especially in the low liquidity market. So keep an eye out for that over the next few days. For today's first trading opportunity, the cabin is bare once again, so we may have another short session. But let's take a look at oil. This is something we took a look at a few weeks ago, and we are still looking at the same trade, but it may come in a different way. Not a few weeks ago, but or last week, I should say. So oil here on the daily. Let's go through that ever boring but necessary IPDE process. Identify, predict, decide, execute. What have we recently done on oil? By the way, if you're watching on YouTube, do me a favor, hit that like button, show your support. Make sure you write your notes to check out that coffee break episode yesterday too. Really good. The Trader Coffee Break YouTube channel. Awesome episode. We, in a blink of an eye, 30 minutes was gone and we had to stop. So, yep. We have violated previous structure, higher high, higher close, H3C. And now we're pulling back into structure, right? So we go back to our basics just of reading trends and whatnot. We have our move here. We have our move here. We have our new structure high here. Once that new structure high is formed, this becomes our outside return. So this is the point that needs to be violated in order for us to change our opinion. And it's important that you understand that from this perspective, because as you go to lower perspectives, you're going to get all types of other wiggly moves that happen that are there to confuse you. So you got to make sure you know what spot matters the most. But we're getting a pullback right now. The anticipation is that we can continue up to retest previous structure highs right up here. So let's go down to the 4 hours. Going to give us a little bit more clarity on our situation, right? You can see price action has made, drag this up a little bit, our new structure high. Then we have done this, pulled back, looked like we were going to extend, and then we pushed downwards. And again, this is why that clarity from the higher time frame is important, because some of you may look at this and you may say, we have violated the outside return. We are in a bearish rotation. But have we actually? Have we actually done any of this? Ooh, Cody's looking 130s. Ooh. I thought I was ambitious with 124s. We have not, right? This is simply called a complex pullback. Yep. Good job, George. Yep. Which is a multiple leg pullback. It looks like an AB equals CD pattern. It could be, it doesn't have to be 2, it could be 3, it could be 4, right? Basically a pullback that isn't just a straight shot down. So this is still a buying opportunity here on the pullback. Now we got a few things happening here which are interesting. They're not all lining up, but we'll draw them in just in case. But one thing we can measure, I'll let you guys answer. What is one thing we can measure here with this complex pullback? What can we do to kind of look for harmonic movement in the market? Yep, we can draw on an AB equals CD pattern. So this first move down being our A to B. The middle move back up being our B to C. We can copy and paste an equal measure move, an AB equals CD pattern. You can see it completes right where we're at. Ryan says a bull bat. I actually was looking at a bull butterfly. But I'll draw your bull bat on. Where's your, well, let me know where you're starting your bull bat from, and I'll draw that on. My guess is here maybe, but let me know. In the meantime, I'll draw on George's Fibonacci extension from our swing high to swing low. So the A move to the B leg and back up. You can see a 127 right there. Right, Ryan says 111.05s. 111.05s. Oh, I'm way wrong. 111.05s. Wow. Or sorry, 111.05s. Oh, sorry. But right around this area, right here, he's on WTI. Probably right around here is my guess. Let me know if I'm wrong. If that looks about right. No, it's all good. So Ryan's looking at a bull bat like this. X to A to B, just hitting that 50% retracement. B to C, right up here. CD completion, right down there. Something I looked at this morning was a bull butterfly. I'm going to change the color here, but looking at X to A to B. Let's get this to be a different color. Let's go blue. Blue. X to A to B. B to C. Now your CD, again, depending on how you draw butterflies, if you use a 127 extension from the A to B leg, it's going to be right here around that AB equals CD pattern. Give me a second to sneeze. If you use a 127 inversion, you're going to be a little bit lower. You might be near your bat, A to X backwards, right around that bat. So if you use 127 inversion, I'll draw another leg in. It's going to be right around here for that butterfly. Something else we can do is, obviously, we can look left. Structure leaves clues. We're coming right near a structure shelf right here, so not a bad area. This is most definitely going to be a high volume area as well. So if you're looking for entry reasons here for oil, we'll go down one more time frame, right? You have some advanced patterns which you can use for aggressive entries. You also have some simple patterns here as well, right? Now, price action hasn't actually done it yet. I'm going to erase this stuff. We came close, which is interesting, is we came close here as well, right? Came very close to a double bottom before going up. Same thing here. We don't technically have a double bottom. Who can tell me why? This is, and George, this would be a good example of a double bottom. A lot cleaner than the one you shared me yesterday. We may be getting close, actually. I think we're going to need to spike down a little bit more. Let me double check. It was a little bit different this morning. 111.91. And our close, 111.9. Yeah, so we need to go one more tick down. One more tick down, we have a valid double bottom, which could be used as an entry. So if you were a double bottom trader, you can look at this double bottom as a reason for entry. You do have to deal with a little bit of this down on the hourly. The fact that we broke and closed below this, we're kind of sandwiched in between structure. So that may be something that negates you from taking the trade. But you can look for double bottom. You can look for 26.18 if you're in need of more confirmation. So if you don't trust this level, or if you never get that double bottom, wait for the break and close above. Wait for the retest, and that retest being your opportunity to buy. So a few opportunities to get involved here on oil on a complex pullback. Again, I like 124s. Cody's looking for 130s. Let me just pop out. Cody's our oil expert. Okay, same level, just a little bit. Again, Cody's always a little bit more aggressive than me. I'm a little bit more conservative. He's a little bit more gangster with his target taking. But same thing, a test of the highs there on oil. Akil, would that double bottom be valid because it has already tested inside structure? It has not tested inside structure. So yes. Now this location is not a good location for me, but as far as like double bottom in the structure right here, it has not tested this most recent level of structure. Now the location, meaning that it broke and closed below this one. If this is the one you're referring to, then yes, then this would negate it for me because we're below here. Because my target would be back in here. But as far as like the general rule of like the move has already been made with the most recent level of structure, this has not been tested. But my guess is you're referring to this level over here. So I probably should have asked that first before commenting. Okay, yeah, inside level, yeah. Yeah, so this wouldn't be anything that I can take. I have to wait for the 26.18. Gilbert says, didn't the lowest low didn't test the lowest low and lowest zone close. Well done, Gilbert, over on YouTube. There's a little bit of delay over there, but well done. You know the rules. Awesome. Cody said, I would just love for it. Yeah. Hey, I'm in favor of oil going as high as possible. I'm in the same boat as you, Cody. Just keep going up. Keep going up. Oil can keep going up. Gold can keep going up. The S&P needs to start going up. That one's not really helping me right now. Neither is Matterport, but anyway. So that's oil for you. Any questions on this one, guys? If so, let me know. Give a few seconds for the delay on the live stream. And of course, if you guys have a opportunity you want to take a look at next, let me know. It's a bear cabinet today, but we're going to see if there's any day trading opportunities like we did yesterday down the lower time frame. So take some profits, then dip and buy more. Yeah, yep. It's just beans. It's cheaper to buy more S&P. It is, yeah. It just means it's cheaper. Yep. Now the funny thing is there is a it's I was talking to this. I did an interview with 10-minute trading the other day, and we were talking about how the theme has shifted to, like, first it was like everyone was scared when everything would tank. And now the theme is overly shifted to, like, yeah, when everything tanks, I just buy as much as I can. And it's like, that's not always a good idea either, right? You still have to time these things, right? Because if you buy as much as you can and this thing's going to continue to tank, you're going to be in a lot of trouble, right? You can go broke before it actually rebounds. But it's interesting, always kind of the trendy thing now is to, like, is buy the dip. That's the trendiest thing out there, where everyone, it used to be fear, run away. Now it's like, hey, buy, hold on to these losing positions. And no doubt you're seeing a lot of people just lose everything because they don't really know what they're doing, but they think they know what they're doing because it's trendy. So there's it's not as simple as just like, hey, when the S&P has a bad day, you just buy as much as you can. Because if it has a month of bad days and you bought as much as you can on day number 1, you're not going to make it to day 30 when it finally turns around. So you still need to do that. And this is where technical analysis comes in handy, right? Now, obviously, it depends on your investment strategy. If you're dollar cost averaging, then that's different. But you're consistent with when you're putting money in. You're not just flushing everything in at one moment. But this is where technical analysis comes in handy, because instead of just buying everything when it dips, right, you can use that skill to say, hey, we should dip to here. And if we hold here, then this is a sign that we should be turning around soon. Or if we, get this type of signal here, this is a sign that we should be working our way back up, or we're back in bullish rotation, or we're still in bearish rotation, whatever it may be, right? It's important to use that skill, because therefore you're not just like buying at random moments. There is a plan of attack. But it was interesting because I noticed that too. And obviously I don't operate in the stock world as much as I do in the foreign exchange world. But speaking to him, he sees a lot of that, and that's not necessarily healthy either. But in general, people doing stuff with money they don't know what to do isn't healthy. There was a guy yesterday that reached out to me about accepting money in Bitcoin, but he doesn't know how to use Bitcoin. And what would your advice be to him? Like, someone wanted to pay him in Bitcoin. He doesn't really know anything about Bitcoin or how to use Bitcoin. He was asking for my wise guidance. What would be your advice? Yeah, don't accept money in Bitcoin, right? You don't have to. You don't have to. I think the guy gave him like half a payment in cash, and then was going to give him the half a payment in Bitcoin. It was like, look, if you don't understand it, don't use it. You don't have to. Yeah. Like, there's no need to. Yeah, but everyone's doing it. I said, well, no, not everyone. You're not doing it. You don't have to. I don't accept payment in Bitcoin. We get that all the time about with tier one, where it's like, hey, can I pay for membership in Bitcoin? No, unless you're gonna give me a whole bunch of it. we're gonna raise the value. Then we can talk. But yeah, just stay away from it. Yeah. So you don't have to do the trendy thing. So, all right, YouTubers, kicking you guys off, trading viewers, kicking you guys off. Please hit that like button on your way. I'm going to see you guys this weekend for another Trading Edge video. Last week, a lot of our ideas paid off pretty nicely. So we'll see if we can do that again. It'll be interesting because we're coming off 2 holidays and